Good morning, everyone. This video that we're going to be going over today on the 24th of March 2016 is about the FTSE 100 and what's my kind of preference and opinion on the UK stock index here. So I'm firstly just want to go over. I've drawn some technicals on the chart. You can see the low of the year here down at 5.5. You can see the open of the year was around. Let's have a look here. Was around 6.2. So we're just a fraction down on the year at the moment. So you can see some of the major support levels and resistance levels, like you would join in here on the draw in here on the market. But I want to kind of bring in some kind of basic technical analysis here to show that we've been making lower lows and lower highs. Now, for someone like myself, I do take into account fundamentals quite a bit, but the technicals and the fundamentals are kind of lining up at the moment for me. So I've been quite bearish on the market now for the last kind of 3 to 4 days, especially after seeing this consolidation and a pause off of the 2014 October November lows, where you can see it's kind of rejecting this resistance level here. And today, my position is really nicely selling off, which is something that's great. Some stats for you today on the FTSE. We have got 58% momentum to the sell side, so 58% of traders are majority of short, and 42% of traders are long. Now, this month alone, there's been quite a bit of indecision in the market. We've had 50% of buying and 50% of selling, so we're in a bit of two minds here in regards to the indecision. So you can see the indecision there with the sentiment from the different traders that are approaching the market and what they're looking for. Today the market is moving very nicely in our favor. It's actually it's down on the day by 65 points, which is fantastic for us, just over 1% there. The biggest sellers in the market today is Next. It's down 9% and it's heavily falling at the moment, followed by Anglo-American, which is down 6.34%. We've got Standard Chartered down 4.28% and Fresnillo down 3.97%. Now, when we're looking at a wider picture of these the stock indice markets, Wall Street also has had 74% sentiment to the short side. So it's quite an interesting play at the moment of what we're looking at. And in direct relation to that, on the opposite side, we've also got spot gold. It's got 77% of buying. So you can see that individuals are kind of bearish towards the equities today, as an overview for you. That's something that I really want you guys to kind of focus on and take into account. Why else am I short at the moment? A lot of people as well are trading Barclays today. There's quite a lot of sentiment on Barclays to the sell side, and the banking sector is also getting hit quite heavily. Now, when we're trading, you want to look at the bigger picture of what to focus on, and what I can take away from currently what's going on is that the market is very kind of bearish fundamental news. We've got negative data out of China still. We're going through a bit of an issue with terrorism at this moment, with the Brussels bombs that have gone off. That's causing a bit of a stir. We've also got the Grexit still going on in the background, the Greeks exit. We've also then got the Brexit now, Britain potentially exiting the European zone. And all of this stuff wastes fear and indecision into investors' mentality. Now, based on repetition, usually in the markets, once you've had a rally, you get a sell-off. Why? Because traders are taking profit. So for now, not only am I short on the index, but I'm also getting more focused on some more short stock positions. So for example, I'd be looking at weak sectors such as the mining sector. I'll be looking at potentially crude related stocks. A good example of this would be this one here, the Wood Group. you can see that the stock is starting to sell off. It's been quite bearish lately, and that's something that we would look to join in on the pullbacks and enjoy those short positions to the downside. We've then got Royal Dutch Shell. Obviously, that's that's come up, as rejected a previous low there. You can see. Let's draw that on there for you. And it's been quite bearish ever since the start of 2015, pretty much. And then going away from oil, we've also got Jimmy Choo. I don't want to know what you get up to on the weekend, guys, but Jimmy Choo here is quite a bearish stock. And you can see that how it's rejecting its kind of IPO lows, and it's kind of been a bit of a flaw in here. Financials aren't looking too great on the stock as well, so it's something to keep an eye out on. When we come back to the FTSE, it's kind of a question of where is this going. Now, I'm not going to indulge too much into my strategies of what I'm looking to do, but with all of this going on, there's a bigger picture as well. We've got a bit of worry coming out with the presidential candidacy coming through as well, who's going to get into power and so on and so forth on that level. All I can see from a kind of global news level, we've got a surplus in oil, which is going to weigh down on the energy markets, which has a big effect on the global stocks here. And then we've got all of this kind of political issues going on with the potential European exit for the UK, and a lot of that sentiment is weighing on, and that's weighing not only just on the indices, but it's also weighing on the pound against the dollar, which is heavily selling off at the moment, coming back down to 2008 lows. So for me right now, it's you can tell that a lot of investors are playing it safe. They're turning to government bonds, and they're looking at short-term and long-term gilts, and that's starting to push up over the last few days. But there is definitely still some opportunity that is strong within this market, to the buy side and both to the sell side. My only advice is to take advantage of both sides of this market, especially when it's indecision. Hence my short position on the FTSE. My initial target will be about 5,900. I'm not far away from being able to lock in and move to break even, just to cover my positions in case we do get a break to the upside. However, you've got to remember that we did dip down in mid-February, all the way down to that 5.5 level. And, we've had a straight through rally here of 12.2%. So, when you're looking at that, that's a big move that we've seen in that direction. Usually when you've had a rally of that kind of distance, you're going to see a sell-off of some form or another come into play. I mean, if I just drag this and move this over here, it's the same distance rally prior, and then it had a sell-off here. Now, I'm not going to say that's something that always happens, but if just by showing you that there, you can see in a couple of relations where you've had the strong sell-off and you've had the rally followed by another sell-off. It's something that you can see that there is at least some reaction in the market there. So that's kind of what I'm looking at. I hope you enjoyed this short video in the breakdown of the FTSE 100 and what we're looking at in regards to that. I will cover a couple of trades. In fact, I'll give you one trade that what I've been looking at and what I'm actually in long on at the moment, which some people may disagree with me, but it's within the travel and leisure sector, and it is William Hill. As you can see, William Hill had a big sell-off on a profit warning here. But when you look at the long-term support level here, we've got a long-term support level on this stock, which it hasn't been broken really. This level hasn't really been broken all the way back since 2013. It's a very stable level for us. When I look at the financials, I'll have a quick look for you just now. Now, the financials aren't as bad as people are making it out to be. Let's have a quick look here. So I mean today, I got a nice buy-in off of this yesterday. I'm already in profit. So today, and the last hour, I've already seen 62% of buying coming through. When we look at this, their equity is still growing year on year. Their cash from operating activities is pretty high. Their net income's had a slight decrease, but it's nothing really mega on the bigger scheme of things. We've got 20 brokers rating this as a hold rating. We only need a few of those to upgrade to a buy, and we could see this, full on the rally continuing here. So, with a simple understanding of the support levels and understanding the metrics of the financials behind it, it's not too difficult to be able to get a low risk buy-in entry off of this support level and rejection. And you can see we're already moving into profit here. Now, I'm not saying this position is potentially going to win, but it's quite hard not to take it based off of reward to risk. If you look at that, we've got a 25 point kind of stop loss there in regards to our distance, with a solid upside there of the highs that are around 80, potentially coming back to the highs of around 95. It's just shy of a 4-to-1. That's a fantastic potential return, and you can see how it's rejected this level before and moved back to the upside again. So with simple technicals and the financials, stocks, even when the market does look very bearish like this, there's still a lot of opportunity in the markets that we can utilize. So this is our Forex Friday video. It is recorded on Thursday because it's bank holiday tomorrow, but I hope you enjoy the video, and I look forward to catching you next Friday for our next Friday market breakdown. Take care, guys.